program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
This is the Global View. Welcome to Wednesday here at Ausbiz. I'm Andrew Gagan. Good to have you with us. Let's check what happened overnight. Global equity markets pushing further into record territory, with investors buoyed by signs of cooling trade tensions between the US and China, as well as an expected interest rate cut from the Federal Reserve and US quarterly earnings. Wall Street's major indices posting record closing highs again, led by the mega cap tech stocks. Nvidia shares gained on news that it will build 7 supercomputers for the US Department of Energy, and said the company had $500 billion in bookings for its AI chips. It also announced new details with Finnish telecom equipment maker Nokia to target the AI communications market. Nvidia shares closing above $200 for the first time. Microsoft shares gained after the company reached a deal that allows OpenAI to restructure into a public benefit corporation, while giving Microsoft a 27% stake in the ChatGPT maker. Apple shares briefly hit $4 trillion in market value for the first time, making the iPhone maker only the third public company in history to reach that milestone. Tesla's board says it's prepared to name a new chief executive officer from outside the company if shareholders reject Elon Musk's proposed $1 trillion pay package, and he steps down. And UPS shares rose after it forecast fourth quarter revenue above expectations, with rival FedEx also gaining. Well, President Trump has welcomed newly installed Japanese Prime Minister Sanae Takaichi's plans to accelerate a military build-up while also signing deals on trade and rare earths. The Japanese government pledged to provide $550 billion of strategic US investments, loans and guarantees earlier this year as part of a deal to win a reprieve from Trump's tariffs. In the US, private payrolls increased by an average of just over 14,000 jobs over the 4 weeks to mid-October. A weakening jobs market is expected to help push the case for an interest rate cut from the Fed when it delivers its policy decision tonight. US Treasury yields have edged lower ahead of that decision. The 10-year has fallen below 4%, the 2-year is around 3.5%. And markets are priced in a 100% chance the Fed funds rate will be cut by 25 basis points, with an additional 4 more cuts in this easing cycle. The US dollar index down slightly on the day. The Aussie is trading at 65.8 US cents. Oil prices have marked their third straight day of declines as investors consider the impact of US sanctions against Russia's 2 biggest oil companies, along with a potential OPEC Plus plan to raise output. Brent crude futures down 2% to $64 a barrel. Copper's little changed. Iron ore's up about 1% to $106 a tonne. And gold has slipped to a 3-week low as hopes for progress in US-China trade talks dimmed its safe haven appeal. Spot gold trading at around $3,950 an ounce. And Bitcoin has fallen to around 113,000 US dollars. Let's get across what we're seeing on Wall Street at the moment. Howard Silverblatt is joining us from S&P Dow Jones Indices. Howard, welcome back. Good to see you. So yet more records. What do you see as driving the market right now?
Well, today's great gain, 36th high we've had year to date. We were up 0.23, but only 104 issues were up. It was all Nvidia today. Without Nvidia, you were in the red. It has been top heavy month to date, about 66%. 2/3 of the gain this month, which is over 3% of it, is from the Magnificent Seven. Companies are going into them. That said, there's a lot of momentum. Earnings are great. They're coming in at record numbers. Sales, which were expected to be down, are actually setting a new record. Wall Street missed that mark on that because the estimates were down, and now they're setting a record. Employment is decent. We're expecting, as you said, tomorrow's Fed to cut 0.25%. And more importantly, what we're going to be looking for tomorrow is the end of QT. We're expecting quantitative tightening to end relatively soon, definitely under Powell. So we'll be looking at year end, but there's a good chance it happens tomorrow. And stopping QT is like adding another 25 basis point cut. So that will fuel the market. There is momentum here in this market, and it is going up.
Just looking at that chart at the moment, Howard, referencing what you're seeing with those reported earnings. So what, around a third having reported already? What are you seeing?
Yeah, it's about a 30% of the market value is actually put in, and they are beating, as you can see, 85% of them are beating estimates, and sales 77% are beating. Usually sales anything near 60%, you would be happy. So people are spending, companies are making. The next 2 days are going to be major. We're all talking about the Fed and QT, which is going to have the impact. Over the next 2 days, Wednesday and Thursday, we get 5 of the 7 Magnificent Sevens coming. 25% of the market value is reporting in the next 2 days. Google, Microsoft. I mean, these things are enormous. We're going to be looking to see how much capital expenditures they're doing, how much is AI, and how much is additional on there, but that is the massive amount. Tomorrow and Thursday are significant events to the market, and then you've got the tariff situations with Trump probably meeting with China on Friday, potentially Thursday or Friday, depending upon where you are with the calendar on there.
Howard, as you mentioned, 5 of the Mag 7 reporting later this week. What are the expectations there? What are the risks given how much has been priced into those stocks given the AI trade?
There's a lot of risk there, and it's hard to impress when every time you do a beat, the market says it's expected. We are pricing in good numbers. So if the numbers are not good, we will see a reaction. And given the way they've gone up, especially Nvidia, they're now 8.5% of the index at this point in time. They were 5%. Again, without them today, the market would have been down. So there's a lot riding on it. But we're looking for the guidance. There is a possibility if you do not make your number, at least on the profit number, not the sales, but if you don't make the profit number, if you've got a decent excuse, which will be hard to come, but the guidance has to be up and it has to be positive, and that expenditures going forward, the AI has to be positive. Otherwise, you're going to see the market pull back, and it could be significant because there's a lot of profits already built in, and no money manager wants to be the last person holding the cards. They'll take their profit and run.
Meanwhile, Howard, the US government shutdown continues. Now, this is on track perhaps to become the longest on record. Now, the markets look as though up till now they've largely ignored that. When is it going to start to bite, do you think?
Yeah, first I say the largest was 39 days. But this is the largest where all the government's been closed. The prior one for 39 days, only 25% was gone. So this is the longest one. And both sides, the Democrats and Republicans, are holding tight on their side. But it's going to start to get very painful over the next couple of days. Payrolls are not going to be met this Friday and over the weekend. That's military, about 650,000 employees. Then the air traffic controllers, post office, all these are not going to be paid. People are going to see it. And the most important item is that Obamacare, which has 24 million people for the health care in the U.S., the premiums are set to go up significantly, some 75 to 100%, almost doubling, because the subsidies that the U.S. put in during COVID, okay, are running out. One side wants to extend it, the other side does not. So it's going to get very painful. The street is hoping that by this weekend you get some kind of a deal, not in detail, but on a higher level, which permits the government to start opening up, probably an extension of the health care benefits and a phase out. That's the negotiating part. Yes, they're going to decrease, but at least get the extension in here at this point. So again, it hasn't been that painful yet, but it's going to get very painful this weekend, and that will put pressure under the politicians.
And if there's no resolution this weekend, where in the market are you likely to see that pressure emerge, do you think?
If we don't get one, and countering anything that the tariffs or an agreement with China might support the government in there, we're going to see consumers start to pull back, concern about that. You're going to see liquidity issues. You'll see unemployment numbers starting to go up. When you add that to the healthcare, the states are going to start to get in there. The unions already have gone in with the furloughs and gone to the courts. So it could get messy next week if there's nothing in there. And the market definitely would pull back. on there. The consumer staples area definitely would go there. Utilities and power and energy probably can hold up on the short run. But the longer it goes up on, the worse it is. The rule of thumb is about 0.2% of GDP each quarter gets hit for the government shutdown. But the hope is that once you settle it, you do the back pay and you make up. Otherwise, again, 0.2% a week on GDP.
Howard, thanks so much for joining us from S&P Dow Jones Indices.
Thank you.
Let's turn our attention to the local market just ahead of the open here on this Wednesday, looking for a positive start, modestly higher for our SPI futures, up around 0.1%, I should say. We are getting more quarterlies as well as AGMs to watch out for today. And critically, we're going to get that quarterly read on inflation, the September quarter numbers, which you would anticipate are certainly going to influence the RBA ahead of its decision on Melbourne Cup Day next week. Stay with us, more to come.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.